Hello guys, thanks for tuning back in. My name's Lee, Crypto Mainly. I just want to give you some hopium really, guys. Let's have a look at the hash ribbon signal. Obviously, it's lots of people talking about this at the moment. Just want to make a point, a couple of bring a few things to your attention. The things we've been following hash ribbon signals all the way back from August, 2022, in the VIP group, and we'll come back to this in a minute. So I just want to show you a few things. Very, very important not to front run this signal, guys. So what we're looking for is the hash ribbon to fire on a weekly time frame. Okay, to be as certain as we can be. If we look on this now, you can see on the chart here that in actual fact the blue buy signals here on a hash ribbon indicator. So those blue dots relate to buy signals on a hash ribbon indicator. For those that don't know, at the moment we've got a grey capitulation signal still showing on the weekly. If we go to the smaller time frames, you'll notice 5 day. It takes a little while to calculate, guys. But you can see 5 day is showing as a blue signal, but of course that's not confirmed yet. You've got the 3 day, which is when it comes up, you'll also see that that's also showing a blue buy signal, again unconfirmed just yet. 2 day, 2 days showing as a buy signal, and the 1 day. Okay, so just be careful, guys. Just be really careful. Just wait till we get the weekly buy signal. Okay, that's the only thing I want you really to take away from this. Yes, some of the lower terms, the high time frames, they are, you could say arguably that the hash ribbon indicator has fired the buy signal, and people will take that and start to run with it. But I just, personally speaking, I'm going to wait until the weekly signal fires off. But anyway, guys, let's just have a look and show you a couple of things. So what I've done on here, so you've got some averages of the price moves since the indicators fired. So what I'm going to do, guys, we know that this point here is the it's the 20,000 peak. Okay, we know that the 2017 run up to that peak, was amazing, and it was a 34x. So I'm going to before that point, I'm going to exclude all of the data prior to that first cycle at 20,000. Okay, guys, I just want to have a consistent data to work with, and that's why I've decided to do that. So if we do that, I'm just going to show you what I've calculated here. So you've got January, so this is the latest one there. January 2019, so we're starting at this 291 measure here, and you've got the 49, you've got the 84, so you've got 291, 49, 84, 253, 253, 84 at the top there, 84 there. Okay, and this is where the last update for this particular chart was given to you guys, and I'll show you here. We're going to have a look at some of the more recent ones. Let's have a look. Let's see if I can find it where I've got the projection on there. Okay, so yeah, if we look at this particular chart here, we can see that way back then you had this W formation here, and you had a blue buy signal here. Okay, and we're going to go back to this where we were looking at it prior to that, when price was here, and we front ran the signal here. Okay, we didn't get the buy signal. We had it on a 3 day. We didn't get it on the weekly, and you saw what happened afterwards. So from this price point here, it was about $22,000. We went down to about 15.5. So if you front run this signal, you can get burned quite badly. Okay, so I just wanted to make that point to you, but just bear in mind this is where we are on this particular chart. Okay, if we actually look at the chart now, that W was here. Okay, so this little W at the bottom is this little W here. Okay, and then we can see that based on these figures, the average was 152. So what we were saying is from that blue buy signal, so if we just bring up the buy signal here, so this blue buy signal here, okay, we were projecting out that the average moves this cycle were 152%. So when we measured that up to 152%, it came up to actually almost exactly the area that we were interested in. So it didn't go straight there. Admittedly, we've got some some peaks and troughs. Interestingly, if you look at the move from the low here to the highs, that was around about sort of 92%. So around about sort of the lowest of the range, if you like. Obviously, we've got a 49 there, but if you look at there's a couple of 84s in there. And we'll come back to that in a minute. But I just want to. Sorry, I'm digressing a little bit. So, the average was 152%. So this at that time was me just forecasting, where I thought the price was going to be based on that hash ribbon signal. Okay. So what you can see is so this information here. I haven't updated the chart since. Okay. So all of this information from this point where I projected that was going to be the high, it is new. So you can see, it didn't go straight up to our projection. In fact, it came up. Okay, we had a bit of a pause in the middle, but we had a secondary buy signal here. Okay, so you can see that at the bottom. We had a buy signal. Okay, so although we didn't quite make it to the 152 average, we got a secondary buy signal, which then took us up to the average move. Okay, which was quite interesting, I thought. So what this data is here in the red box. The first one, 115%, you'll forgive me, guys, hopefully, because I actually missed one of the buy signals in the center here. So you see this buy signal here, okay? We see that buy signal. Oh, I moved that there. If you actually measure from that buy signal up to the first high, that was there. It's about 115%, so I haven't done it quite accurately there. But trust me, it's about 115%, and I missed that one off. I actually missed the move from there to there. Okay, so from this buy signal to this buy signal here, this one to this one, I actually missed off the earlier data, and it would have taken this average down by about 10%. But what I've done is I've added it in now. So the 115% is that move there. 92% is the move from the bottom here up to the top there. So that was 92. And then you can see 196 is then the move from the next signal, which was this one here. Okay, so we've got, just to recap, 115 from this one. Yeah, 92 is from the bottom to the top there. 196 now is from this buy signal. Okay, so we're going to measure from the buy signal low up to the next peak. 192, it's 196 if I wiggle that about a bit. It's 196, and then the last one, 122, is from this blue buy signal here. Okay, so from the low up to the recent high. Okay, somewhere around there, so 122%. Okay, so it's interesting. So this data from this last point and the last time I looked at this chart, actually, you can see that these buy indicators, they don't fire very often. To be honest, it was only the recent chat on Twitter that made me look at this again. I have got an indicator alert set up on the hash ribbons indicator. So for those of you that don't know how to do that, if you can just right click on the space in the indicator there, and you can actually add an alert to the hash ribbon indicator. So you click on add an alert, and then you can actually, you can either set the alert up for what you want. So either if it's going to give you a buy signal, a capitulation signal, whatever you want to set it up, or you can put it up, any of these settings basically. Okay, so but just so that you know, guys, with this new latest information, okay, so including this data plus this data, it gives you a new average of 143%. Okay, so the low at the moment of this latest moves, as we know, is up here. So it's measured there at 76,700. Okay, so if you did 76,700, sorry, 76,700. Okay, and then we add on 143%. So 143% is 109,681. That's 143% of the move. So obviously we add the two together. It gives us a projected target for Bitcoin of 186,381. So that's at the lowest, the low end of the range of where I think the cycle high is going to be. As you know, guys, I think it's going to be 180 to 320,000. For those of you that don't know, that's where various charts that I've produced, are suggesting somewhere in that range. I have actually ran my own statistics through an artificial intelligence program, and it's said that in its consideration that 180 to probably 250,000 is probably its its own prediction of where the cycle high is going to be. Okay, so you've got to take some notice of that. Artificial intelligence, although it did say it does depend on world's economies. It doesn't depend on adoption and how much of the new countries and things adopt Bitcoin as currency. If it becomes currency, if it becomes a method of payment, or I forgot what they call it now, a medium of account, then basically prices could go a lot higher than that. I asked about stock to flow and said that the stock to flow is forecasting $1 million for Bitcoin before the end of the year, and it gave it about an 18% probability. But it says obviously it's not out of the realms. It does depend on what the biggest money makers in the world decide to do, and that will have an effect on everything. So, guys, don't forget, this is great. It looks lovely. 186,000 would be great. Don't forget, as you can see here, on the way up from the bottom, we've had the bottom one blue buy indicator, three blue indicators. Now the fourth. There's nothing to say that when it gets to 186,000 that we don't have another one. Okay, that could happen, and again, that would take us up to, like the 500,000 mark. Whether that happens or not, time will tell. Let's have a look at just a couple of other things, really, guys, while I'm showing you this. So, just be careful not to front run this, guys. Wait, just be patient. There's plenty of time. We're going to get corrections. One thing I did want to say, very, very common. Even if you look at this chart, you'll see that the indicator flashes buy, and then you get a decline in price immediately after. Buy, decline in price. Well, obviously this was COVID, but even on the smaller moves, buy, and you get declines. It's quite common if you get a buy signal that you then get either some sideways or some downward motion. Okay, so not all of the time, but it's quite common after the blue buy signals that you do get the prices come back down. Okay, so just be a little bit careful with that. A couple of things I want to show you on here. So this is a different way of measuring the Fibonacci scale for price measurements, and you'll see if you pull the Fibonacci measurement from the high to the low of the cycle, you'll see that the next cycle high is at the 2.32. Okay, so same again, if you on this chart from the high to the low comes up to the 2.32 is where the cycle high is. The high to the low on this particular one, I genuinely believe that this point here, that all of the damage that was done by COVID in this instance, this is what created a smaller peak here, and obviously gave us a double top rather than the parabola that you normally get in the cycles. I genuinely believe that, guys. I think that if that hadn't happened, we would have had a similar structure, very clear, same, parabolic, like we do each cycle. Actually the start of that point of the cycle, that cycle was so much steeper than any of the others. And people are saying, well, it wasn't sustainable and all these things. There's all sorts of arguments about that. But I mean, the fact of the matter is, it started out really strongly, and then I think that that COVID did so much damage to the markets and to the to global liquidity and everything, that's why we only on this occasion reached the 1.618. Okay, but now we've got M2 money flow, M2 money supply inflating and increasing, and you've got all of these things with obviously Trump's now crypto friendly. We've got huge companies, organizations, ETFs. You can see that the bank's laying foundation for the future of integrating cryptocurrency. Guys, it's happening. It's happening. It literally is. And so if this cycle is anything to go by, if we go by the previous cycles, if you look at the 2.3.2 on there, that's where you get closer to the 500,000 price tags. I actually don't think that that's unreasonable. 500,000. Stock to flow is saying 1 million. Who knows? It could be. But guys, don't write these prices off. It could happen. This is one of the few cycles that we've got. A long consolidation before the breakout, followed by a longer consolidation after the breakout. You don't usually get that. If you look at the breakouts, it's parabolic. Look at a breakout, parabolic. Look at the breakout from here, parabolic. Breakout from the mid-cycle peak, parabolic. Weaker, obviously, because of this. But look, we have had months of consolidation below the previous all-time high. We've broken above it, and now we're consolidating just above it. This whole area is going to be, the resolution to this price compression is going to be explosive. Make no mistake, guys. It's just mathematics. Okay, I just wanted to show you this. This is really important, guys. So this basically demonstrates that when you get the sideways moves on on Bitcoin, most of the time is spent with the prices going sideways. Okay, and then you have these periods of time where the prices are going up. Okay, which is usually around about a month. Okay, so I've posted this in the group. I'll post it in the group again, so you can have a read. But just note, guys, be very careful, because when Bitcoin takes off, there are only a small number of days that you get the parabolic moves into the next consolidation. Okay, so you see there 4 days, and you say 4 days at the bottom. So what we're talking about, if you can see it, but you've got, this is a green box. If you look inside the green box, you'll see that there's actually a very thin, darker green slither of box where the price has made most of its move. Okay, so if you look at that and look at all of this time, over all of this time, it will make its moves, the biggest part of its moves, in very small periods of time. 4 days, 4 days, 1 day, 3 days, 5 days, 5 days. So you get the idea, guys. Just be aware. If obviously it's then moving upwards for around about a month, but the most of the move is done in a very short period of time. So don't miss out, guys. Don't get caught out by that, is what I'd say. Okay, a couple of things. I've posted that before. So this one was just basically showing you that although things look bad, you've got this similar thing. You've got right from the very base down here, right from the very base, you've got this M pattern where price comes all the way down, breaks the lows, and then shoots off. You've got an M pattern again, breaks the lows, not convincingly on that one, I admit, but shoots off again. You've got an M pattern here, breaks the lows, and off we go again. Again, you've got on a much larger scale, you've got an M pattern there, which broke the lows here. Okay, then you've got a secondary M pattern here, which again broke the lows. You've even got a third one. I mean, if you were thinking that the price is going down, that is a classic downtrend. You've got low highs, lower lows. Yeah, so you got high, low, lower high, lower low, lower high, lower low, lower high, lower low. If anything was going to break down, you'd have thought it would have broken down then. But again, it took off, and now we've got the same thing again. We've got M pattern, comes down, breaks the lows. So what's going to be next? This is really important. I've done my own studies on this, but this really sort of summarizes my study on it, which I think this is really nice and clear and clean. But if you measure the Fibonacci on time Fibonacci from the halving to the halving, okay, so if you mark the halvings on a chart, you pull off time fib from the halving to the next halving, you'll notice that the 0.236 is the mid-cycle peak. I want you to remember that. 0.236 mid-cycle peak. Okay, 0.382 is the high. Okay, I don't know how to get rid of that writing, but the same thing again. We've got the 0.236 here. Okay, mid-cycle peak, and then you've got the 0.382. Okay, which was the actual cycle peak. So you can see here, pink ones are the first top or mid-cycle peak, and then the orange ones are the the actual cycle tops. Okay, so same again. This is the 0.238. Again, mid-cycle peak, arguably, and then you've got the 0.382 where you've got the 69,000. So this structure is quite different to the previous cycles. But again, what was different about this cycle here was that huge black swan in the middle, and I genuinely believe that that's what created the difference between, you know, this cycle and, sorry, the last cycle and the previous ones. So then again, so to just make that point again, just the 0.236 is the mid-cycle peak on each of the cycles. Okay, the mid-cycle peak now is projecting end of March, beginning of April. So the 0.236 again, end of March, beginning of April. Okay, so we're almost at the end of March now. But I just think that there's an explosive move coming, and that we're going to see, you know, April, there's going to be possibly then a mid-cycle peak, and I think it's going to be probably 160 to 180,000. It's going to be, you know, that much of a move. It might be at the end of April, but people sometimes, you say things like that, people say that's ridiculous. It can't move that much. It can't move that far. Well, in the same period of time in 2017, price 10x'd. So, you know, it is possible. It can happen. Don't get caught out where you think that the cycle's over and things like that. If you do a time fib study and you measure and start to do like a bars pattern from these parabolic moves from where we are now, and then pull them across, you can see that the price targets are somewhere between 180, let's say 200,000 and 500,000. Okay, that's where the price targets for all of the things that we look at seem to be pointing towards. And when everything's pointing towards that, then obviously, you know, you need to take notice of that, I think. You know, this is obviously, everyone knows about this. This was the run up 2017. You know, much larger corrections in that one. We've only seen, you know, an average of 25% corrections, and yet, you know, people were saying that this cycle's much tougher than the last cycles, but, you know, clearly this run up hasn't been as painful or anywhere close to as painful as the 2017 run up, and yet everybody talks to that and raves about that, you know, the 2017 cycle. So this wouldn't have been easy to stomach any more than, you know, than what we have in the stomach now today. Guys, you know, we know that the Petra upgrade is coming, so I just did this analysis. So we got the merger, the run up for the merger, you know, that basically the Ethereum upgrades are marked on this chart, and you've got, you know, the percentage run up for each of those. You know, the average gain for the run up into each of those upgrades is 111%, and Petra is on the verge. It was tested on Wednesday. They want to test the Petra upgrade for 30 days, and once they've done that, then they're going to implement it into the mainnet. Okay, so within 30 days, you know, from point of test, if everything starts to look okay, we can see prices, you know, accelerate again into the next. Okay, be warned, once the upgrade happens, you know, you do get sell-off afterwards. So just watch for that, guys. Okay, you get big sell-offs after the upgrade, so just be careful. Having said that, if we break this neckline here with a Petra upgrade and we come up and we flip that as support, then you've got a really, really clear head and shoulders pattern here. Very clear head and shoulders pattern. Okay, and the measured move is going to take us up to, you know, over 5,000, 5 to 8,000 quite easily, and I think that's quite conservative for this cycle personally. Okay, guys, so that's what I've got for you in terms of the hopium for today. Hope you enjoyed the video. Hope I wasn't speaking too long. Not sure how long the video has been going on for. We've had a look at this chart before. This is basically, instead of using, you know, a logarithmic curve like a lot of people look at, you know, who's to say that this actually doesn't turn out to be like a, you know, a rising channel? You can see it's a parallel channel, and you've got also, when you've got support like this, where you've got a support where it starts to increase and then increase and then increase, as we know, that's parabola or a parabolic move forming. Okay, so you've got, you know, if this was the base at the bottom here, you've got, you know, the first level, you've got the second level, and you've got the third level. Well, it's quite clear on you know, as far as parabola is concerned, from the, you know, the base of the third consolidation, the price doubles in price the quickest. Okay, so look that up for yourself, guys. You know, research parabolic moves. You'll see you get a 3-tier system: 1 flat, 2 flat, 3 flats, and then from the base of the third flat, the price doubles in the quickest amount of time. So there is a steeper, more parabolic move to come. Okay, what are these red dotted lines here? This is basically the third quarter. So you've got the time. We're looking at time now. So we're looking at September until the end of the year. I just thought I'd draw that little amount in there, which then if you project out where the price is going to be, somewhere in that region, and you've got the prices here, which again, this is where the 300,000 comes in. It's starting to look more believable, isn't it? This is, I've started to develop my own indicator, which isn't, I've been developing it for months now, back testing it, changing it, altering it, tweaking it and things. But it's something which is in the pipeline for coming soon, shall we say? Let's have a look at the total chart now. Bitcoin tried to break down earlier. It's come back up. So this is the rising channel we've been looking at for a long time, guys. It does look like it has broken down from, just remove that one for a minute. Although it does get it does look relevant because it's taken a rejection from that support. It's just retesting the breakdown point at the moment. So be careful what you're doing. I do. Incidentally, the indicator that I've produced is saying that there's an 87% chance that the price is going to hit 90,100. If this indicator, there's 87% accuracy, so not 100%, but that's a very high accurate, a very high accuracy. So it could be that Bitcoin breaks back in. You can also notice that it's only, look at the time now when I'm recording this video. Okay, in the bottom corner, it's 2:33, so the US market has only just opened. This could be just a pre-dump before the market, opens in the US. All the volume comes in and it could just take off. And this could just be another fake breakdown like happened here. We were nearly going to take a short here. Didn't quite get, it didn't get the close below. So obviously we cancelled the short position. I actually took a long position from there instead. And I closed once we saw this M formation at the top. I did close the position then, and obviously now we've come back down. But this could be just another fake out, guys. Because of the time of day. If this was any other time of the day, I would probably think otherwise. But I can't see, and I did put in the group only just a short time ago. Let me just show you. So I've just put in there. Be careful shorting this, guys. It's simply the traditional markets filling gaps. So, for example, the Nasdaq has come down and just closed this. Just close this gap here. Okay, so that's only just happened. And obviously, the correlation between Nasdaq and obviously because Nasdaq is the the US tech companies, Nasdaq and Bitcoin correlation is very strong. S&P, this one's a bit more concerning because we've got a gap here which is just being filled, but then also we've got a larger gap down the bottom here. So this could make sense that if it comes back down and fills the gap, you could see Bitcoin coming back down and retesting the lows. That would also make sense with the hash ribbons because the hash ribbons say once it's fired, you can get like a 10% correction afterwards. It's quite common to do that. So, interesting, guys, interesting stuff. So, sorry I'm jumping around a little bit. See the total chart. Guys, if you're unsure of what to do, just a small tip, have a look at the total chart because the total chart, depicts everything, okay? So you've got a really, got long wicks here. Every time you get the wicks come down, you get really strong buying. Okay, so even to the point where this is a 6-hour time frame, which obviously the professionals use to trade mostly. So you can see on there, we've come back above. As long as this closes, just look for the 6-hour close back above this level, and that again is a sign of strength, not a sign of weakness. So we are. The total chart, the bulls really are trying to battle this big long-standing resistance. The problem they've got is there's all sorts of resistances all meeting in the same place. So you've got the previous lows here, forming a strong resistance there. You've got clearly strong rejections, the red arrows from this red dot trend line, which is what we're up against now. And then you've also got, you've got horizontal resistance. Okay, you've got the descending resistance, and you've also got this red resistance line here, which is the lows of the wicks from the bigger range at the top there. So it's no wonder that it's taken some time, but it is battling and it is looking like it is going to try and break back up through. This rising wedge pattern, as you'll know, guys, is a bearish pattern. There's a 76% chance that it will break to the downside, and if it does, the target for that is somewhere at the lows, at the lows of the wedge. Okay, so what I usually do is I draw a fib from the top, from the bottom to the top, and I would look for somewhere between the 78.6 and the 88.6, as an area for of interest. So if I just take that fib off there for you, and I just add this fib on, up to the top there. So yeah, we could see this is the total. So if the total comes all the way back down to this this area here, between the 61.8 and the 78.6, sometimes it gets down to the 88.6, and and that's quite normal. So it's nothing to worry about if that does happen. But obviously that would correlate with the Bitcoin chart, as you can see. So if it comes all the way back down to the bottom, you'd be looking at coming back into our buy zone too, if you like. I just think that there's a lot to look forward to, guys. I just don't think this is all like quite normal. And let me just show you. It's frustrating when it doesn't, but it knows where you're trying to place it. You'd think it would just have a little. It would know where you're going, because you're only going to go for the highs, aren't you? So you would have thought trading, you would have put a little thing in there by now. Oh, this magnet, Jesus, let's put it in there. It's only rough, just do it roughly. So yeah, so 78.6. It makes sense. Comes down. It's this support here as well. Ties up nicely with the lows here. Okay, and it also 78.6 lines up with all of these supports. These purple dotted lines are previous support. So it wouldn't surprise me if we do come down into this area down the bottom here. That would be quite normal and actually probably quite healthy. What we don't want to see, guys, and I'll just show you this on this other chart. Where are we on this one? I just want to show you this. What we don't want to see is really important. Okay, we just take that, move that SMA. Okay, 13 SMA that was, for anyone that's interested in that, by the way. So this is the Gaussian channel. Okay, what we don't want to see, guys, is the price close inside the Gaussian channel. Okay, currently it's the orange price there. I've made that line orange so that the price stands out over there, which currently is 70. Bear with me a moment. It is 75,217. Okay, if you start to see prices close on a weekly time frame inside the Gaussian channel, let's see what happened in the past when that's happened. Okay, so I had a close call here, didn't close inside, so we got a nice bounce. Closed inside the channel there. Not only did it reach the bottom of the channel, price just collapsed through the bottom. Okay. Same for this one. Closed inside the channel. Again, took some time to get to the bottom, but not only did it reach the bottom, it collapsed from the bottom. So, if that happens, guys, just so that you know, the lower boundary, bearing in mind it goes below the lower boundary at the moment is 55,000. So you're going to see sub 50k if prices start to close below. This is a weekly, so if you want to set this up for yourself, we do, weekly time frame, indicators, type Gaussian channel, okay, and it will just come up. For those of you that don't know, it's GAUSSI. It comes up there, okay. So you got Gaussian channel. You just click on it to load it onto the chart, and that's it. You've got your own version of it, and you can keep your own eye on it. But it must be on the weekly time frame. You're looking for it not to close inside the Gaussian channel on a weekly time frame. As I say, it's okay if it bounces off. We bounced off here, nice bounce, all healthy. It's okay if it comes down and bounces off it, but you don't want to see a weekly close inside, because very soon after the price will be, will be in big trouble. So please make a note of that, guys. Watch out for that. Protect yourself if you see that happening. Okay. And I'm going to leave it there, guys. Hopefully I haven't waffled on too long. But thanks ever so much, guys. I sincerely appreciate every one of you, just being in the group and giving me support. Most of you have been there for a long time in the group. And, we've had some good times and we've had some hard times. And it's felt like this cycle has actually been hard. It's been very frustrating. I can't stand the meme coins. I think that they drive me crazy, but that's just me. Perhaps I'm getting too old, but let's hope that we've got a nice future to look forward to, which I genuinely believe that we have got a really nice next 10 months to look forward to. and I'll be there watching for the charts. Just so that you know, guys, every single day I'm watching the charts. I've got indicators, 400 indicators set up. I watch about 200 charts, and I will be updating you with those charts as I feel, as and when I see bottoms in, everything's good. Indicators will fire off in the background for a longer term picture, and then I'll start sharing the charts and things with you so we can all have an enjoyable end to the year. Thanks ever so much, guys. I'll speak to you soon. All the best.